Today we're going to be analyzing Apple, Tesla, Netflix, Nvidia, SPY, and more, and telling you how to know exactly where they are going and what their next zone is so you can capitalize and gain massive profits. First off, Apple. Apple, as you can see, we have Bollinger Bands on this side and moving average on this side. Moving average of 20, moving average of 40, moving average of 100, moving average of 200. And then Bollinger Bands here, which tell volatility and where a stock is going and where the trend is headed, either downwards or upwards. In the case of Apple, since Apple broke the middle line of the Bollinger Bands, it is currently going upwards. And it is going to continue going upwards because the edge just keeps increasing. And the stock, after breaking the middle line upwards, always starts to reach the edge. And then if the edge keeps increasing, then the stock just keeps chasing the edge. Vice versa, if the stock breaks the middle line downwards and it goes to the edge, and as you can see, it did reach the edge. This one didn't expand. It reached the edge, and then it started going upwards to the middle line. That is how you know where a stock is going. But in this case, Apple, we know exactly where it is going because after it broke the edge, right, it just keeps increasing. This whole week has been increasing. Now, how you can use the moving averages and Bollinger Bands together? As long as Apple maintains itself above the moving average of 20, it is going to keep increasing. As the edge keeps increasing, the stock will also keep increasing. So Apple's just going to keep going up and up. Now, where to know exactly where it is going, where it is headed? Well, that is simple. That's where you use zones. Zones is where you mark where stock went in the past. In this case, Apple was at 191 in the past, 192. So you just put a zone here, and then bam. So Apple has great space to go to at least 192.04. because it reached it right here, as you can see. We can zoom in a little bit. So it reached 191.90. Basically, that is where the stock is headed as it keeps increasing. And if Apple keeps itself over the moving average of 20, how you know if it's over the moving average of 20? Every morning, just check it. If it's over the moving average of 20, then just buy a call, and it's just going to keep going up and up. That is showing exactly where Apple is going. Now, how to know exactly where AMD is going? AMD, same thing. And AMD is above the moving average of 20, so it's just going to keep increasing, and it is also going upwards. As you can see, it broke the middle line, so it's just going upwards, reaching the edge constantly, and it's just keep going upwards. Now, how do I know this? Well, let me just teach you the basics. Okay, so there's a moving average of 20, moving average of 40, moving average of 100, moving average of 200. Now, how does this work? Well, basically, when the moving averages of 20 and 40 or any moving averages cross, as you can see, these cross right here, if the stock is above them, then it goes up like a lot. It increases a lot, right? Let me show you some examples. When a stock is above a cross, like for example, the moving average of 200, the purple one, and the moving average of 20, the yellow one, crossed right here, right? Bam, the stock just went up. Stock increased a lot, right? Then it happened again here, and it was above, so then it just increased again. That's what happens with moving averages. When moving averages cross, then and if the stock is above them, then it just goes up a lot. If the stock is below them and they cross, then it's a huge put. In this case, as you can see, look, the moving average of 20 and 40 both crossed, right? But as they crossed, the stock was below them. So what does that mean? A huge put that ended up going crazy until 410. It went from 430 to 410. How to know exactly where it was going? Well, simple. It was started right here. Then the cross, you should have just bought the put because it was going to break the middle line. And then you just buy it till the edge. And then the edge was at 419. Bam, you sold the put there. And then as the edge just keeps increasing, you just kept buying the put every day, and selling them every day. And then bam, you're making money off of it. That's what happens with the edge. Like for example, with SPY, the edge just keeps increasing, right? And it has huge zones to reach. So what do? You buy a call, and then every day you keep it as long as it maintains itself over the moving average of 20. Why over the moving average of 20? It's simple. If it's above the moving average of 20, then it's just going to keep increasing, especially if the stock, the edges keeps increasing, right? But if it breaks the moving average of 20, when a stock breaks one moving average, it usually heads to the next moving average. So you would know exactly where it is going. For example, if SPY were to break the moving average of 20 right now, so like let's say it reached 449, right? If it reached 449 and broke the moving average 20, we would know exactly where it is heading to. It is heading to exactly 443, a 7-point put. Why? Because if it breaks the moving average 20, then it's headed to the moving average of 40, or at least the moving average that's closest. Now, again, if it breaks the moving average of 40, then it's going to the moving average of 428, the moving average of 200 and 100, which is 428. That is exactly how to know where a stock is going with moving averages. With Bollinger Bands, same thing. Well, not same thing. With Bollinger Bands, you know where a stock is going. If it breaks the middle line, it reaches the edge. If it breaks it upwards, it reaches the edge upwards. Pretty simple. This is what happened. It broke it 427 to 446, a 20-point call, 19 to 20-point call. Same thing downwards. If it breaks the middle line downwards, then it reaches the edge. Went from 431 to 419, a 11-point put. Same thing, right? Now, next stock we're going to be trying this out is with AMD. With AMD, same exact concept. Broke the middle line, right? Upwards, it reaches the edge. So it goes from 102 to 114. You can see this whole call, right? And then the edge just keeps increasing. So you just keep buying calls every day as long as it is over the moving average of 20. As you can see, it broke the moving average of 20 and look where it headed, right to the moving average of 40. It went from 118 to 116.5, right to the moving average of 40. That's exactly what happens. And as you can see, same thing applied with AMD. Here, almost all the moving averages cross together, right? That just means even more power to it. And that's exactly what happened. The stock was above the moving averages when they crossed, and it exploded upwards. Like I'm talking 104 to 120 in AMD. That is phenomenal gains, especially since this is options trading. So like this is incredible profits. Same thing happened here. The moving averages crossed. The stock was below, downwards. The moving averages crossed again, a three-way cross right here. Moving average of 100, 200, and 20. Crossed. The stock was below them. Huge put downwards. Absolutely huge put downwards. And it started to rise again. Then it broke the moving average 20, reached moving average of 40. Same thing, right? If it breaks the moving average of 20, it reaches the moving average of 40 if it's down. And if it's up, if it breaks the moving average of 20, it also reaches the moving average of 40 if it's up. But moving average of 40 goes to the next moving average, goes to the next moving average. After it breaks all moving averages, you just wait for a cross. Once it crosses, huge call upwards. Now, where to know where it is going exactly? Well, you just zoom out, and then you see what zones it has to reach. For example, we knew it was going to go to 121. After it broke right here, this zone of 111, right? As this cross happened right here, we knew it was going to go to 111, right? We just knew it was going to go to 111. That was the next zone. After it broke 111, then we knew the next zone was 118, right? Broke 111, then it went to 118. And then after 118, it will go to 121, right? If it breaks 121, then we know exactly where it is going. It is going to 124. After it breaks 124, then we know exactly where it's going to 131. Now, how do we know if it's going to keep breaking zones? This is where Bollinger Bands come in. So with Bollinger Bands, if the edge just keeps increasing, then the stock will just keep increasing. And then how to use moving average in this case, if the stock keeps being above the moving average 20, then it's just going to keep increasing. All right. Now, as you can see, promised NVIDIA, Netflix, and all these stocks. All right, NVIDIA, same exact thing. It's above the moving average of 20, so it's going to keep increasing, rightfully so. And with Bollinger Bands, it just keeps increasing because it broke the middle line, right? Reaches the edge, and then the edge just keeps expanding, and the stock just keeps following it, right? And so NVIDIA next week is just going to keep going up, and up because it's above the moving average of 20. The edge keeps expanding, right? And Bollinger Bands, so it's just going to keep going upwards. Now, as you can see, the moving average 20 and 40 are likely to cross next week. They're headed for each other. If they cross and NVIDIA is above them, then a huge call upwards. If they cross and NVIDIA is below them, then huge call downwards. So about 443, the next moving average, of course. But if they cross and they're above, then the next zone is clearly 501. That is to know exactly where a stock is going with this strategy. All right, let's go quickly with Netflix. Netflix, same exact thing. It's going to 480, right? If it keeps increasing like this. How to know if it's going to keep increasing like this? Well, this is how you know exactly. So right here, it was pretty dangerous because the Bollinger Bands stopped, right? If this was a red candle, this would have gone all the way down to the middle line. But it was a green candle and the Bollinger Bands expanded again. So what's going to happen? It's going to keep going up and up and up and up and up, right? And it's above the moving average 20, so it's going to keep going up. Now, as you can see, it didn't break the middle line, but what happened here was an earning, right? It was at 348, earning, put it at 399, right? What is an earning? An earning is a 50-50 chance. We don't play with earnings. We do play after earnings, though. And what happened after earnings? It was above the middle line, so clearly it has to reach the edge. It appeared at the edge, and then the edge started increasing, right? The edge started expanding. So it just kept reaching the edge, went downwards, reaching the edge, reaching the edge, reaching the edge, reaching the edge, reaching the edge. And how to know exactly where it was going during this time period? Well, moving averages crossed here, right? As you can see, the moving average 20 and 40 crossed, and the stock was above them. So guess what's going to happen? Explosion upwards, especially as they reach the edge. Absolutely incredible. So Netflix is going to keep increasing as long as it's over the moving average of 20. All right, Amazon. With Amazon, same exact thing. It's above the moving average of 20. The moving average of 2040 are super close to crossing, almost even cross, right? And it's above the edge keeps increasing. It's just going to keep increasing, and increasing. It broke the middle line and it reached the edge. Now it's just going to keep increasing, right? Rightfully so. Also, the moving average is crossed. Moving average of 200 crossed with moving average 20. Moving average 200 also crossed with moving average of 40. Moving average of 100 crossed with all three. The stock was above them in all three cases. Explosion upwards. As you can see, though, the Amazon actually broke the moving average of 20 and see where it went to the moving average of 40. Broke the moving average 20 again right here too, and it went to the moving average of 40. So as long as it maintains itself over the moving average of 20, we are good, and Amazon is going to keep increasing. All right, now with Google, same exact thing. Broke the middle line, and it's above the middle line, right? So it has to reach the edge. Their edge is 138, right? And as you can see, we're using zones right here. I already had the zones, but basically it already reached here. So you just put the zone of 136, reach the edge, reach the zone of 136.95. As you can see, the strategy works perfectly. Now it's gonna go headed again to 136 to 95. Why? Because it is struggling though, but it is slightly above the moving average of 20. So if it awakens when the stock market opens again and it's above the moving average 20, guess where it's going? To 137, especially because Bollinger Bands also say it has to reach the edge, which is around 139. So after it reaches 137, next zone is, guess what? 139. And then using zone, it's 139. That is to know exactly where the stock is going. Right, next stock we're going to be analyzing really quickly is Tesla, more in detail. All right, so with Tesla, it broke the middle line, reached the edge, reached the exact edge, which is 237.17, and then just keeps increasing. Same thing happened here, right? So a cross happened here. I actually operated this and got a lot of money, like thousands of percents right here. Well, what happened? Well, clearly Tesla was above the moving averages as they crossed. It was a huge cross right here. And the next moving average was the moving average of 200. So it was a perfect game plan. Broke all moving averages. They crossed, so huge call upwards. And The moving average 200 was right there, so that was the perfect zone, right? So it was 240, right? I even put the zone right there, 240. And then bam, reached the zone of 240 exactly. So this is how you know exactly where you're going and exactly where to sell. Went from 224 where I bought to 240. It was a 17-point call. And that was absolutely incredible. Rightfully so. And then it started decreasing, started reaching the other moving averages. As you can see, the moving averages went up, so it wasn't that hard to reach them. Then it broke the moving average of 20, and that is where a put appeared to the moving average of 40, right? It went from 235 to 226, about a 9-point put just because of breaking the moving average of 20. And right now, it is below the moving average of 20, so we have to see where Tesla is heading to. Right now, wouldn't operate. Rightfully so, because they are so close. Moving average 20 and 40 are super close, and we have to know if Tesla is going to break the moving average of 40. And if it breaks the moving average of 40, guess where we're going? We're going to 213. But if it breaks the moving average of 20, then we're going to 237. If the edge of Bollinger Bands keep increasing, then we can see a huge call upwards to about 248. Because that is the zone now. As you can see, it stopped right here. It reached 246.40, and then it dropped, so that is now a zone. It means something was resisting it up there, but also leading it up there, so that is why it is a zone. And that is exactly what's going to happen with Tesla. Now it's just a waiting game to see if it breaks moving average of 40 or if it breaks moving average of 20, and then this strategy will tell us exactly where it is going. Now, thank you for everything. And enjoy. Please continue to like, comment, and subscribe. And thank you all for everything. And I hope you guys truly enjoyed this video as much as I did and learned as much as I wanted to teach you. Thank you.